Hello aspirants, I am Indumati Karthikeyan from Inkara IAS Academy. Today we are going to discuss about the 23rd January current affairs. The topic taken from the Delhi edition. The topic is double taxation avoidance agreement overview. This topic comes under our GS to bilateral, regional and global groupings and agreements involving India or affecting India's interests. In this topic, we are going to discuss about what is the importance of DTAA. India has DTAA with which nation and what are the benefits of double taxation avoidance treaty and what are the categories covered under this DTAA and India Sri Lanka DTA amended. So these are the provisions which is discussed by today. First of all, why in the news? The DTAA, a tax treaty signed between the two or more countries, is a key objective of the taxpayers in these countries can avoid being taxed twice for the same income. A double taxation avoidance agreement applies in cases where the taxpayer resides in one country and earns income in another. The DTAA can either comprehensive to cover all the sources of income or be limited in certain areas such as taxing income from shipping, all transport, inheritance, etc. India recently amended the double taxation avoidance agreement with Mauritius to plug certain loopholes. Now the Mauritius entity will have to pay capital gains tax year while selling shares of the company in India from April 2017. And also there is a company could not avoid tax as it was not resident in India. It could get away from the taxman in Mauritius too. As a result, many shell entities sprang up in Mauritius to profit from investment in India and get away without paying any taxes. First of all, we must know what are the importance of DTAA. DTAA is intended to make a country to attractive investment destination by providing relief and dual taxation. Such a relief is provided by exempting income earned abroad from tax. The resident country is providing credit to the extent tax have already been abroad and also paid in abroad, and double taxation avoidance agreement also provide a concessional rate of tax in some cases, and also India has DTA with some nations. First of all, India DTA more than 8 countries, of which comprehensive agreement including Australia, Canada, Germany, Mauritius, Singapore, UAE, UK and US. So these are the countries we have the DTA agreement. First of all, we must know what are the benefits of this DTA. DTA is intended to make a country an attractive investment destination by providing a relief of dual taxation. Such relief is provided by exempting income earned abroad from tax of the resident country and providing credit to the extent taxes have already been paid in abroad. So this is the main concern. And what are the categories covered under the dual taxation avoidance agreement? Services, salary, property, capital gain, saving, fixed deposit. These are the main categories which is covered in the double taxation agreement. And also we must know the base erosion profit sharing. What is that? The base erosion profit sharing is a term used to describe tax planning strategy that exploit mismatches and gaps that exist between the tax rules in the different jurisdictions. It is done to minimize the corporation tax that is payable overall in either making tax profit disappear and shift profit to low tax jurisdiction where there is a little or no genuine activity. In general, BEPS strategy are not illegal. Rather than they take advantage of different tax rules operating in different jurisdictions. That BEPS is a major significance in developing countries due to the heavy reliance on corporate income tax, particularly from multinational enterprises. And also BEPS initiative is a OECD initiative. It's approved by G20. Identify was providing a more standardized tax rules. And also we must know about the India Sri Lanka DTAA amendment. That recently Union Cabinet approved the signing and ratification of the protocol amending the agreement between the India and Sri Lanka, the avoidance of the double taxation and the prevention in fiscal evasion. The existing double taxation avoidance agreement between India and Sri Lanka was signed on January 22nd, which entered into force on October 22nd. This India and Sri Lanka are member of the inclusive framework and such as required to implement minimum standard respect of TTAs. Therefore, the amendment of the Sri Lanka DTAA bilaterally are required to update the preamble and also insert the principal purpose test. So provision to meet the minimum standards. Thank you so much.